Good day, everyone. This is James Bennett, Global Equity Analyst at Anchor Capital. Just a quick discussion on L'Oreal's fourth quarter results from last year. These beauty stocks have generally struggled over the last sort of year and a half. Estee Lauder is the one that's really down a lot, but even L'Oreal was down quite a lot last year, and then year to date this year, the share has been flat to under a little bit of pressure as well. Just looking at the Q4 results themselves, there definitely was a miss. They did report positive top line sales in constant currency of 2.4% year on year. That was below consensus of 3.8%. There's still regions that are actually growing very nicely for L'Oreal, like the Middle East and North Africa and South America. Europe is rock solid. North America was a little bit of a laggard. And then what's interesting with North Asia, which is obviously mostly China, it was down, but it was less bad than feared. So relative to very negative expectations, it was actually a slight beat. L'Oreal management are still pretty confident that the global beauty market will grow about 4 to 5% this year, and with that, their sales and earnings as well. So these guys really are best in class when it comes to the big players in the global beauty industry. So they are really a quality outfit in what's been a little bit of a difficult market. Over many years, L'Oreal has outperformed the global beauty market by about 1.5 to 2 times. It's still outperformed in 2024, maybe not quite as much as we've seen in the past, growing about 5% versus the global beauty market's 4.5%. They outperformed in most regions as well, although for the first time in a while, we actually saw them slightly underperform in China, which is a bit of a new one for them. But as I said earlier, they're still confident that it may not be the best year ever, but that the global beauty market should still continue to grow about 4 to 4.5% in 2025. What's interesting is, although the L'Oreal share price has been under pressure in the last 18 months, actually, if we look at their all-in sales growth of 5.6% in calendar 24, that actually wasn't far below their long-term historic average of about 6.1%. And actually, their 20% operating margin they reported last year was a new all-time record for the company. So within a quite difficult market, this company has actually executed exceptionally well in 2024. And interesting to compare their operating margins with Estee Lauder, which has really fallen on hard times over the last couple of years. And you can see the stark contrast to how these two companies have operated over the last couple of years, with Estee Lauder's margins really having collapsed away. The interesting thing with L'Oreal is that the share price has done poorly in the last 18 months, which would sort of lead one to believe that, the business has been under a lot of pressure. But actually, as we showed, in these previous slides, that they actually performed pretty well last year. So most of what has driven the share price weakness has been quite a severe derating of the share to about a 25 times 1 year forward PE. And the debate on a company like L'Oreal over the last few years is this a consumer staples type company, or is it a luxury company? And the answer has been that it's somewhere in between. But what we've seen with this derating is that L'Oreal has actually started to derate back to more a consumer staple type of rating, kind of a Procter & Gamble or a Unilever sort of rating. So we think the share, it's difficult to say exactly when it's going to turn, but this is a quality business that's starting to look quite cheap, and another 10 or 20% downside could create quite an interesting buying opportunity on this business. Thank you very much.